So let's me go over the HIM Cribbit trading plan for ANF. We've done 3 of them so far. Wow, last time on earnings, Abercrombie soared 35%. 35% in Abercrombie. So let me look at this real quick. This is the ANF HIM Cribbit trading plan. Stock is currently trading at 49.47. Okay, 49.47. Over the last 8 quarters, stock moved up 34.4%, up 9%, down 13%, up 8.3%, down 13.6%, down 8.7%, up 3.4%, and up 7.6%. So over the last 8 quarters, Abercrombie has rallied 5 of the 8 times on earnings. So Abercrombie has rallied 5 of 8 times on earnings. I can look at the money straddle to give me measure and move targets. The 49 straddle. SBAC, I think is today, yes. So the Abercrombie at the money straddle is $6. 2 quote unquote measure move targets. Upside measure move target 49 plus $6 puts the stock at 55. Downside measure move target 49 minus $6 puts the stock at 43. Based on the chart and the chart only, do I think the stock is going up or do I think the stock is going down? So let me bring this up real quick. I looked at the chart and the chart only on the daily chart in ANF. Daily chart in ANF. Huge reversal day. Got really low. Paper came in and started buying puts today. Huge quantity of puts. Paper bought a bunch of puts. And then the stock rallied, okay? They bought a bunch of puts and the stock rallied. So I think they're buying puts as protection. I think the stock can head higher. Abercrombie and Fitch. So I would have 2 retail stocks and I'd be playing them both to the long side. Nice bull channel. Tested the bull channel. I think it gets back up. I want to buy an out of the money call spread. So in Abercrombie, as I look, in Abercrombie, I have a measure move target to 55. So I'm going to look at a possible call spread setup. So let me look at my option chain. In Abercrombie and Fitch, ANF. ANF. So the 49.5 strata we were looking at. So, you know, I want to buy an out of the money call spread, okay? I want to make a bet the stock goes up 10%. And I want to get, you know, 4-to-1 on my money for thinking this, right? So I want to think that the stock is going to go higher. Ooh, so there we go. You know, I was looking at the measure move target to the upside is the 55 line. So the first thing that comes to my head is the 52.55 call spread. It's around 70 cents. So that's not a good enough reward to risk for me. The 33.35 call spread, from my point of view, that's not a good enough reward to risk. I want to get like 4-to-1 on my money on a call spread. Let me see the measure move target again. The measure move target is up to 55. So I always want to be selling the 55 line. In Abercrombie, I don't want to sell out of the money put spreads. The stock has gotten whacked hard a couple times. So I think the 52.5, 54 is 40 cents. As I go through these, I don't see anything that really perks my interest that much. I did just get filled in Nordstrom, so I'm filled in JWN. So in Abercrombie, I want to buy a $2 call spread for about 40 cents. And they're not. They're a little too rich for my blood. So I'm not going to take a trade here, but if I had to take a trade, I would buy the 53.55 call spread. Always want to be selling the measured move target. So let me look at this real quick. I'm not going to take this trade in Abercrombie. This is the only trade I would make. Would be buying the 53s. How about if I rolled it up? Buy the 52s. Buying the 52.55 call spread. Buying the 52s. These are Feb weeklies. Buying the 52s to sell the 55s. A bull call spread in Abercrombie. Buying the 52.55 call spread. It's worth about 65 cents. So on this trade, my trade would be buying the ANF. I'm not going to take this trade weekly. 52.5, 55 bull call spread for 65 cents or 65-cent debit. That's really good, but that's all wrong. That was very fast though, Ari, but it's all wrong. Your break even is wrong. Your risk, it's a 52.5. I think you're going a little too fast. 52.5. Buying the 52.5 calls and selling the 55 calls. I'm doing the 52.5, 55. 52.5, 55. So, risk on this trade is $65 per one lot. My reward on this trade is $185 per one lot. Okay, and this is giving me a 3-to-1 reward to risk setup. And I'm always selling the measure move target. My break even on this trade is 53.15. My time frame is the weekly, so this is only to the weeklies. And my target is that $55 level. Okay, so this is a 3-to-1 reward to risk setup. I'm not taking this trade. So daily trading idea, I'll call it. Buying the ANF Fab weekly 52.5, 55 bull call spread for earnings for 65 cents. My reward to risk on this trade is 3-to-1. So a nice reward to risk setup. I'm not going to take this trade, but I will save this in here. So I saved that in the notes. Call fly might work, but with the stock moving 34% last time on earnings, I don't want to do a call fly. So a call fly could work, but I'm not taking a call fly. I'm actually not going to take anything in Abercrombie, but it's a daily trading idea. Daily trading idea in Abercrombie. I didn't take anything in Abercrombie. This is just an idea of something that I would want to trade if I found it necessary to trade Abercrombie for earnings. So next trade for earnings is going to be HPQ. This will be the last earnings trade of the day. Went over them 5 of them with real-time, real money trades in an hour 15. So HPQ for earnings. And this stock has sold off 6 of 8 quarters. It has this traditional way of running up into earnings and then selling off. So let me go over the HIM Cribbit trading plan. I'm actually going to sell. I have a couple left of the March 18 calls in HPQ. March 18 calls in HPQ. I'm going to sell those at 44 cents. I paid 40 and then I left some on. I took some off at 45. So I'm completely out of them right now. So HPQ, I'm back to nothing. I have no position on right now. So I have no position on right now. So HPQ for earnings. And the stock is currently trading at 17.11. It actually just got a nice pop from here. Over the last 8 quarters, last time down 12%, down 8.2%, up 3.3, down 6.5, down 0.8, down 20%, down 9.6, and up 2.2. Okay, so the stock historically has moved down 6 of 8 quarters. Stock has moved down 6 of 8 quarters. The 17 at the money straddle is currently priced at $1.50. You can do it as a dollar amount or a percentage, or 8.7%. I always have 2 quote-unquote measure move targets, one to the downside, one to the upside. Upside measure move target, 17 plus $1.50, $18.50. The downside measure move target, 17 minus $1.50 is 15.5. Someone said, Andrew, you can look at the chart and the chart only. Stock going to 15.50 or 18.50. Let me bring up the chart in HPQ. HPQ, similar thing. Rounding top, long-term trend is lower. Rounding top. Can I do a round thing here? That wasn't it. How about this? I think it's headed back down. But I always wanted to find my risk versus reward. So in HPQ, one thing I might want to do is a put fly on the measured move target. So let me look at this real quick. HPQ. As a measure move target to 1550. There are 1550 strikes. So what about I could thread the needle here and do like a, how about the 16, 15, 14 put fly? Ooh, cheap. 16, 15, 14 put fly. So I think it's headed lower. How about the 16.5, 15.5, 14.5 put fly? I'm looking at the 16, 15, 14 put fly in HPQ. Okay? So I'm looking at the 16, 15, 14 put fly. Buying the 16s. Sell twice of the 15s to buy the 14s. The 17 straddle is $1.30, not $1.50. So let me just change this. The at the money straddle is $1.35. So that's going to change this a little bit. So I have a measure move target to the downside now. It's going to move up a little bit. Of 15.80, 1565. Downside's 1565, and the upside is 1835. So I'm thinking about doing something where I sell the 15.5 strike. So the 16.5, 15.5, 14.5 put fly is 14 cents. Sounds good to me. So this is a put fly I'm looking at. Buying the 16.5 puts. Sell twice the 15.5 puts. Ooh. Or I could just buy the put spread. I think the put spread might be better. Buying the 16.5, 15.5, 14.5 put fly. I'm trying to figure out which one I want to do. So buying the 16.5s, selling twice the 15.5s to buy the 14.5 put fly in HPQ for earnings. If I can do something for like 14 cents, that'd be great. You did a 17.5, 17, 15.5, 14. Ooh, I like that one. I'll take that one. 30 cents. Sounds pretty good. This one's 15 cents. I like this one better. I think this one's a better value. 16.5, 15.5, 14.5 put fly. 4. I'm going to bid 15 cents for it right now. This is HPQ. It's offered at 15. Was just offered at 15. Now it's offered at 15 again. This is a put fly in HPQ, and I'm bidding 15 cents for it right now. So this is a HPQ put fly, buying the HPQ weekly 16.5, 15.5, 14.5 put fly for 15 cents. On this trade, what is my risk, my reward, and my break evens? If you guys want to help me here, what is my risk, my rewards, and my break even? I have not got filled, and this is buying 16.5 puts, selling 15.5 puts, buying 14.5 puts. Very good. My risk is $15 per one lot. My reward is $85 per one lot. Break evens is going to be $14.65 on the downside. And $16.35. My reward to risk on this trade is almost 6 to 1. 6 to 1, and my target is at that target at 15.50. I've not got filled yet. I am bidding the HPQ weekly 16.5, 15.5, 14.5 put fly for earnings for 15 cents, a 6 to 1 reward versus risk setup. I've not got filled yet in this trade, but I'm bidding this trade up. This gives me a 6 to 1 reward to risk setup. Does anybody have any questions about this trade at all? Does anybody have any questions about this trade? I'm going to save this as well. So this is 2/21/2013 HPQ earnings. Got about 5 minutes left in the bell. If you guys have any questions, this is a very good time to ask questions. My email is always 24/7. So you guys feel free to email me whenever you want. So if you guys have any questions, please let me know. And pretty good day to 2 unusual option activity trades. Both are winners. And I have to put my Nordstrom trade in here. So I got 7 trades today. 2 trades based on unusual option activity. They were both winners. I am leaving HPQ. HPQ, I'm not paying up. I refuse. I'm just going to leave it right now.